Welcome, this is Sandeep Anand. I was reading a survey and was completely taken off by surprise when I found that majority of the folks, do not understand the difference between savings and investing. People generally confuse savings with investing and overlay each other. And I was caught by surprise, and as just like you might be wondering, but that's a truth. And I really thought, I'll do this small snippet, a small video report just to show what the fundamental differences between savings and investing is just based on six parameters. One slide overview, quick one, take a look. So here are six parameters: term, goal, risk, returns, wealth, and instruments. I have differentiated savings and investing across all of these six parameters. So savings, it's short term, the money you don't need the next 6 months to 1 year. Investing is long term. We have to have the long term view. This is the money that you don't need for next 5 years, even preferably for next 10 years, so that if there is a market volatility, that doesn't enforce you to sell at losses. So that's the only rationale. Suppose you put some money in investing to in the process of thinking like you will get a doubler in the next 1 year, and that you could use for a college admission, for example. That's a wrong way of approach, because the market can be very volatile, and it can really draw down the returns that you expect, and you might end up even losing the capital that you have, or losing in the sense that you might be at a loss at that point of time and you need that money. So to be very cautious about this. So only allocate the money that you don't need for next 5 years or 10 years in investing, which helps you to stay through the course of 5 to 10 years long term compounding, and do not disturb that compounding engine, so which is very key. Then the second aspect is goal, which is uh, savings are generally required for immediate liquidity, which means that you need the money immediately available for any expenses, planned or unplanned, and for any emergency fund. And whereas investing, the goal is all about financial independence, when you need to create that wealth to live your dreams, not the income, the wealth that is required to make you financially independent, and that gives the ability to live the dreams. Third aspect is risk. Obviously, savings do not have a risk. It should not have a risk if you have allocated that money. And investing is medium to high risk, obviously, depending on the instruments you choose to invest. And returns are low or zero. For savings, you get some returns in the savings accounts. Sometimes you just keep that cash for any immediate purpose, so it could be low or zero returns. And returns are quite high if you really invest wisely in the instruments that you choose. Now wealth is other aspect. So savings is wealth preservation, and investing is wealth creation. Wealth preservation, when you say it's the capital that you have to preserve. And wealth creation is a step that can be achieved only if you preserve the capital, first of all. So you need to be wise enough to consult with proper financial advisors, or if you're doing it to your own, you need to be choosing the instruments very wisely, whatever asset classes, diversify it well, so that you end up preserving the wealth, not losing the capital, and then create that wealth out of that. So that's how it is. And finally, instruments. What are the instruments that you have? What are the different types of asset classes that you have? So for savings, you have money market funds, which is basically zero return. I mean, you put the money, you get back anytime. Then you have cash, which is the liquidity factor. Then the savings account, that is, some savings account offer 2% one, but depending on the country, depending on the geographies and type of savings account banks that you choose. Some banks, in order to achieve growth, will be giving very high savings account interest. There are some, say for example, in emerging markets, countries, there could be banks that are in the new age, or upcoming banks, which can even offer 5% say in the returns in the savings account. So it really depends, varies, but generally it's low. As a broad phenomenon, it's a low return. And then certificate of deposit is another form of savings deposit that you can create, which can get you some minimal returns. And investing, whereas are generally instruments like stocks, bonds, real estate, and gold. All of them can give really high returns, stupendous returns. Stocks or equities being the best of all, and over long term. And if you choose a wise portfolio of stock, the returns could be immense, that can create the financial freedom. So this is it. I mean, pretty simple differences between savings and investing. Hope this was helpful. Thanks for staying with me.